Traders, good morning and welcome to another live webinar. How are you guys doing today? Is everyone all right? Good morning to our friends also on Zoom and on YouTube Live. Zarabayad said, good morning, Theo. Good morning, Zarabayad. Mogil said, good morning, Theo, and good morning to everyone else. How are you doing, Mogil? Mohammed said, good morning. Good morning, my friend. So, as usual, this content is for general information only and is not intended to provide trading or investment advice or any personal recommendation. And to keep up with the news, the major news events in the markets, please visit our podcast section on the website. So I take you through every single major news event that can affect the price move on the currency pairs we are trading mainly. So please make the effort. It doesn't take you more than 3 to 4 minutes to listen to the entire episode, okay? And that's the reason I stopped showing the calendar on a daily basis, because I put a lot of effort on Monday morning to keep you updated about the weekly events, event by event. So please make also some effort to listen to them, and trust me, it's going to be much more beneficial, because you're going to connect the dots, as I like to say. Now, before we move on, I'll just briefly to mention that tomorrow on Thursday, we're going to have the Bank of England voting for interest rates, and also the Switzerland National Bank. And definitely we're going to, as they are keen to hike the rates, we most likely going to experience some strong volatility and fluctuation in the particular currency pairs. Cherry said, good morning to everyone. Good morning, Cherry. Janice, good morning. Good morning back to you, Janice. Larry, how are you doing, my friend? Good morning, Theo. Good morning, Larry. Let's start with the pound US dollar. And one more time, my toolbar lost from here. So, all righty. So pound US dollar, sellers tried to take some control yesterday during the New York session. As we can see here, it's a New York session, but up to the midpoint of this bullish candle, they found some support and price push back upwards. Guys, I told you numerous of times, middle of impulse candles. I believe everyone can repeat the same words. The middle, the 50% of any strong impulse candle. And what is a strong impulse candle? It's a candle that has a relatively long body compared to the previous 10-15 candles. Usually the middle of the candle acts as support, and traders either they put buy limit orders here with a stop loss below the low of the candle, or other traders, they just simply go to lower time frames like 15-minute charts. If we zoom out, so this is the candle. That's the candle here, somewhere in the middle. Not accurate, my drawings. And yeah, price find some support. So what usually people like to do with the lower time frames, they just wait for a trend line to break. You see there's a trend line here on the 15-minute with many valid touches, 1, 2, 3, 4, 5 touches, and then a break. So a break, retest, nice pin bar here, or bullish hammer, people will be keen to buy it, right? So we could buy there, a stop loss there, and try to get some good move out of this. So let's move to the next one. Euro US dollar. On the daily chart, if you prefer, if you don't have the 12-hour time frame and you do it on the daily chart, you can see pretty much the same pattern. Guys, the difference between 12-hour time frame and daily time frame, it's just one more candle. And again, for new traders here, the reason I prefer the 12-hour, if you are using TradingView for charting, or if you are using MetaTrader. Okay, in some incidents in MetaTrader, I don't know why people, they cannot add the 12-hour time frame. For me, on the MT5, on the MT4, for sure you cannot do it, but on the MT5, you do right click here on the time frames, you go customize, and you have a bunch of different time horizons here, and you just click to the one, you insert, and it's going to appear up there. So why I like to use the 12-hour horizon? Simply because it shows what happened in the New York session in the middle of the London session, but clearly shows what happened in the New York session. These are the New York session candles. It starts at, if we talk in GMT time zone, it starts at 10 a.m. GMT until 10 p.m. GMT. So 10 a.m. GMT, it's pretty much very active during the London session, and also it continues the whole New York session until the close. So I like to trade this time on the charts. Now, the euro didn't move with any significance to the downside so far. We have a nice support here, so we can see some upward momentum from this point. Again, right now to buy, if people, they buy just from the support and resistance without looking candlestick lines, here it's a support. They can buy with a stop loss. I don't know where the stop loss can go in this incident, mainly below this support zone here. The reason I like and I master the candle line patterns is because I can use the high and the low of the candles to place stop loss. I use the low to place stop loss when I'm buying, and I use the high to place stop loss when I'm selling. That's the only reason. So for this one, I'm still bullish because the trend in the time frame I trade is up. Australian dollar, very weak. We talked about that yesterday. Extreme weakness in the Aussie. And therefore, we can... someone can agree that, okay, we can sell the Aussie, but we are selling the Aussie against what? Against the US dollar. The US dollar, it's also weak, as we can see from the euro against the dollar and the pound against the dollar. Euro against the dollar, it has minimal retracement, so it's in an uptrend. Euro is strong, US dollar weak. Pound the same, pound is strong, US dollar weak. And the Australian dollar is weak, and US dollar is weak. So maybe ideally, if we want to sell the Australian dollar based on this identification here, we can sell the Australian dollar against the euro and the Australian dollar against the pound. Guys, is that clear? Raquel said good morning to all. Good morning, Raquel. It's nice to see you on the live webinars. Shining star. Good morning, Theo. Good morning, shining star. Athena said good morning. Good morning, Athena. Ruben said good morning, Theo. Darshan, good morning. Good morning, Ruben. Good morning, Darshan. Sorin, how are you doing? Nice to see you here as well, like everyone else, okay? So let's move on. Kiwi US dollar, nothing here, very mixed. USD-JPY. Here is another great teaching lesson for you. USD-JPY, okay, that's the daily chart, even better. If we go on the 12-hour chart, we're going to pretty much see just more detail, but daily chart is still good because it reveals a strong price action here. We do have a gap down yesterday, price traded at some point above the previous highs, and then it closed below the previous day's low. From resistance. And now someone will agree that, hey, this market, it came at resistance, and most likely we're going to see a bunch of sell offers to want to ask the market to and push it downwards. Okay. They want to offer it for sale. Now, if you are trading consistently this type of, I sell the resistance based on the candlestick pattern, and I'm very accurate. I sell, for example, here or there, and stop loss above the previous day's high, and you are consistent with that, it's absolutely fine. But because the market is in an uptrend, we had this break, now it retraced, it's in an uptrend, the market, it's not in a downtrend. This one has a high chances to continue the uptrend. At some point, guys, we're gonna take losing trades, and this is a part of our business. It's nothing wrong with that, as long as you are consistent and as long as you are persistent with your execution. For example, the same trader entered here after this spin candle line, bearish engulfing, nice strong bearish engulfing. Trader Jonathan, for example, sell here, stop loss there, make a nice 2-1, 2.5 to 1, whatever, until the price touches this support. And that's fantastic. That's brilliant. Market replicate the same behavior here. Nice dark cloud candle line at resistance, enters short, stop loss, nice 2-1 trade. Fantastic. At this point here, market broke above. So the same trader, Jonathan, should be aware that, hey, here, market broke above. The next candle didn't close below the low here. So maybe it's not that strong, and let it go. At this point here, though, same trader, Jonathan, must replicate the same method because that's his trading plan. If it's going to take a losing trade, it's okay, because the trader, any trader, you, myself, we don't know what is going to happen next. Therefore, we just execute. And remember, guys, reward to risk ratio is crucial for a trader. Crucial, because if every time you go at the least for 2-1, you can afford to have to take 60 losses and only 40 winners and still be with plus 20% profitable if you are risking 1% per trade on the market. Now, if you're trading on the 5-minute chart and you take 2 or 3 trades a day, this one here, you're going to take 100 trades within a month or within 2 months. So if you make every 60 days 20% profit because of the reward to risk ratio, then that's fantastic. That's super. Even if you go 65 to 35, you are still ahead of the game with less percentage in profit, but that's okay. You are still in profit. So always in trading, we must use the high reward to risk, always. Otherwise, as retail traders in a high volatility market, it's not enough 1-to-1 or half-to-1 to be ahead of the game and make a decent earning from trading. And I'm talking purely from experience and nothing else. All right. I don't do partial close. I don't move stop loss to break even, only for this reason, because I'm a retail trader. I'm not the one who makes the market. I'm not the one who puts the volatility where the price is going to spike before it's going to retrace. So I just play the game based on what I have in my arsenal. Now, if you are trading, what's the problem I identified with traders is that they don't accept the losses. And every time they get the loss, they try to find what did they did wrong to correct it. So next time when they're going to come in front of the same pattern, to take a winning trade. So the probability is that says if you go for 2-to-1, and most likely you need just only 40% of the time to be right, or 40 trades out of 100 trades to be winning trades, and 60 trades can be losing trades. They don't accept this number here. They want 100 trades to be winners. That's why they try to twist their strategies. They try to shift strategies, time frames, education courses, everything. They try to twist every single thing they believe it's the cause of a losing trade. But trust me, that's not how the market works. The market, it gives us more losing trades from winning trades. That's why we do reward to risk ratio. If we're gonna go, and allow me to say that, unless we go scalping, like that specific thing we do every morning at the same time for that duration, that specific thing is a totally different approach. I'm talking any trading strategy applies to 15 minutes, 30 minutes, 5 minutes, 4 hour, blah, blah, even 1 minute chart. If you do it throughout the day, when the markets are dynamically changing, when traders close position during the New York session, London session, and we see these long tails left in the market and so on. All right. So, did you understand something from what I just said? Did anyone understand something from what I just explained? Or you are almost fall asleep in front of the screen? Francis, hello, Francis. Good morning. Darshan said, you understand nothing. Thank you so much. I like your honesty. Darshan asked, cable did retrace past the 61. That's awesome. Just kidding. I know, man. Just kidding. Ruben, it's nice to see you here. Ruben, very honest statement. Ruben says, it took me time to accept my losses. Absolutely, to every one of us. We are humans, and when we take losses, it's like we think we are not good enough. It goes back very deep in psychology, and it's something I don't have time to explain here. Yes, it's correct, Maria. Francis, excellent. Okay, awesome. Let's move on. USD Canadian dollar. You see, guys, price came almost, let's check how much it retraced. It retraced to 50%, and then it dropped backwards yesterday. So I'm bearish on this one, and I have a nice analysis on the podcast. You can listen to that and understand how can we play with the retail sales in Canada as well. Why we don't want to trade the pound CHF? It's simply because both they're going to have interest rates announcement tomorrow. Yes, we broke outside of this consolidation pattern. We most likely going to experience some upward momentum, but let's accept the fact that we can find better trades on the euro pound, on the euro JPY and on the pound JPY, purely because of the weakness of the yen and the strength of the euro and the pound. Guys, any currency pair you would like to see? Let's check the gold. Nice sell-off on the gold at 7 a.m. GMT time. So gold, that's the daily chart. That's the nearest support. And that's the nearest resistance for the daily chart. Now, if you're going to trade gold on the 5-minute chart, your nearest resistance is this one, and your nearest support is this one. Every time you're going to go to a 5-minute, 1-minute chart to trade, remember the previous day's high and the previous day's low, it's the most significant support and resistance for you. If by the time you are in front of the screen, this breaks, then the next available support, if it breaks the downside, it's going to be your major support for your time frame. WTI daily chart, very messy here. It's very easy to when we see the market in real time, we identify, okay, this is ranging on the daily chart, or it's just moving sideways. We are in the middle of this move. We don't know what is going to happen, so we don't trade now because it's a low probability. Then, if we over the sudden see a break to the downside after 1 week, because that's a daily chart, some traders have the tendency to start blaming themselves and say, I missed the opportunity. Guys, an opportunity that never been written down in a trading plan is simply not an opportunity. You don't miss anything. The only thing you missed is something you're going to have written as a trading plan, and you are in front of the screen and you hesitate to press the trigger. Then you can talk about, I missed the opportunity because I wasn't ready to trade, or because I didn't trust my my trading plan, and so on and so forth. Okay, but something that it wasn't planned to be trade and you didn't trade, that's not a missed opportunity, that's discipline. And you have to reward yourself for being disciplined and stick to your plan. Bitcoin, yesterday we had this massive push to the upside. We will see if this is going to be the beginning of a new uptrend. And let's check the DAX. So for me, the relevant high, it's this one. The relevant low, it's the previous day low, because I will go to the 5-minute to the 1-minute chart. Now, as yesterday, we had this lower high and lower low. We still do expect to see some more weakness. Let's zoom in on the 4-hour chart. 4-hour chart, it doesn't have any other support prior to this one. You can see that's the reason I use a 4-hour chart before I go to the 1-minute chart, is to find out any other support or resistance that it wasn't visible on the daily chart. And if you guys say that this one here, this one here, not the current price high, but the previous candle high, it's a resistance, absolutely. So we can mark this. Anyhow, there is 34 pips. No, they can be moved 34 pips during the London Open. Yeah, our 5-minute chart, it's in a downtrend, nice consolidation. Love this pattern, consolidation break, consolidation. Maybe we can see some more continuation to the downside. Either we can go sell stop here, we can go buy stop there. 3 minutes before the market open, I will definitely would like to go for a sell stop there. There are 11 pips. So I'm not going to place a sell stop right now because there are another 2 minutes actually for the London Open. But here I'm going to go for a sell stop order in 2 minutes from now. And I'm going to go for a buy stop. I'm going to see if I go for a buy stop based on what the price is going to do here. Buy stop from this point. Let's check some comments. Yes, it's correct. Excellent. Cherry, yes, thank you. Biniam, New Zealand cat, bro. Okay, we're going to have the New Zealand cat. Thomas, hi, USD CHF, definitely. Williams said the only work with guarantees of opportunities is trading when first is gone. The next one is there already. Absolutely correct, William. Couldn't agree more with you. Henry, Theo, still have some confusion. That's okay. We're going to sort it out. If my entry is 5-minute chart, which time frame is good for identifying valuable candlesticks like inside candles, pin bars? Look, if your entry is 5-minute chart, you want to see what's happening on the 4-hour chart, really. And also the 1-hour chart. You need to be close to these time frames, okay? So 1 minute left by the London Open. Just give me to check how many seconds they left. All right, so I will prepare a sell limit order. Sorry, sell stop order below this low here. We have 8 pips, 9 pips to be made until this support. And then I will go to a buy stop above this high. So I will go for a buy stop here. Now we are in consolidation. Maybe the price is going to break to the upside, maybe to the downside. Come on. It took it there, so I have to cancel this. Okay, let's see if the market is going to move in our favor. I got triggered to the downside. 9 pips made. Let's see if the market is going to come down to give us some more pip to cover the spread and get out of the trade. We just want one tick to bail out. Guys, 10 pips already made in the market. 11 pips, I'm out of the trade. Close, bam. Yep, 12 pips today. Now you can get some rest. All right, so if you are still in the trade, 11, 14, 16 pips, and it's going, it's melting. Fantastic. But remember, guys, now everyone is selling. At some point, the price is going to retrace. Try to get your profits out of the market. Understand that one trade, it's not going to buy us a house. It's not going to buy us a car. It's not going to set up financially free, just one trade. So stay disciplined and stay accurate with your execution. Did anyone close the trades, or are you still in that trade? If you are still in that trade, still a good one, 20 pips. William says that close the trade. Ruben also close the trade. Okay, good. Guys, from time to time now, the market is going to bounce. We had this rejection here. Many people, many traders, they bought here with a stop loss there, but the market is taking the stop losses and then it's going to bounce back upwards. Vladimir closed. Good. So when you identify this impulse, this rejection here, if it's not in this candle, in the next few candles, the markets will retrace. It's already overextended. Whatever it's been making now at this point, SSL, yeah, it was a fly and I just kicked away. SSL order, at some point, it's going to bounce back. Okay, we don't know when the bounce will occur, but yeah. Zarabayat said it closed the trade. Athena closed the trade as well. Mogil closed. Thank you. All right, guys, let's check quickly the New Zealand. I think it was Thomas. You asked for New Zealand cut. Oh, Thomas, why I don't see your comment? I think it was New Zealand cut. We're going to have a look. And sorry, USDCHF. Thomas, apologies. You asked for the USDCHF. USDCHF. Where is the USDCHF? So template all white. Which template I have now? All white green candles. Anyway, let's stick to this one. So USDCHF daily chart. We have this zone here. We have this trend line. I really don't like this move to the upside, honestly, because the weakness of the US dollar and the potential strength of the Swissy could start melting the price. But we are in a zone of a 61 or not yet. No, not even 51. Okay. So we are in a zone approaching the 50% fib retracement, 60.1, 61.8. So this zone here, in my analysis, it's going to be where we expected the price to touch and bounce, if it's going to bounce to the downside. Okay. Yeah, that's what I see. I wouldn't, if I trade on the daily chart or on the 12-hour time frame, I wouldn't be rushed to buy because it's in a downtrend on this time frame. But if you are trading on the 5-minute chart, definitely you see an uptrend and you look to find higher highs and higher lows to buy. But for me, on the 12-hour time horizon, I'm not looking to buy. So All right. Biniam, New Zealand Canadian dollar. New Zealand CAD. Here is the New Zealand CAD. It's in a downtrend. We see lower highs and lower lows. We broke below this consolidation. The market day by day, candle by candle, it makes lower highs and lower lows. So we do have, if you are trading on the intraday, this currency pair, you have this support here as the first support, and the next support found at this low point here. So that's the analysis. Gold, Rod asked for the gold. We already analyzing the gold. Guys, I have to wrap up for today. Again, myself and Admirals would like to thank you for your engagement and your participation on this live webinar. I hope personally that you find enormous amount of value. You are learning and you become better trader. And yeah, that's all from me today. I wish to everyone to have a fantastic day ahead, and I look forward to see you tomorrow at the same time. Thank you so much.